Hey guys, welcome back. Patrick here. Did you know that as of April 2021, there has been 16 different electric vehicle SPACs so far? I have analyzed all of them. Often people ask me what I think about XYZ stock, and I'll be honest, often I don't know. I mean, there's just so many of them, I can't keep track of all of them. But now I've done a lot of research, I caught up on all of them, and in this video I'm going to give you my opinion on them based on my research and if I would want to invest in them. Some of them are really good, some of them not as good, and a lot of them are kind of stuck in the middle where the company has a lot of potential, but we're not really ready to invest in them yet. I mean, they have to prove to us that they're going to be successful in the future. So I hope this helps you in your research. For your convenience, I'm going to do the timestamps in the description, so I do encourage you to watch the entire thing, right? It takes me a long time to do this, but if you want to go back and forth and look at specific stocks, look at the timestamps. Thank you, let's get started. Alright guys, let's start with an easy one, XOS Trucks. Where should I put this one? Well, I'm going to put it in the maybe later category. This is exactly the type of company that I was talking about in the intro, where they do have some potential, right? They can produce these vehicles and deliver them to customers, but they haven't really proven to us that they're going to be successful in the future because the orders are very, very small and they don't have a lot of repeat orders yet. They haven't really announced anything major that would make us think that they're going to be very successful. So one of their main products is going to be the last mile delivery van. You guys know this is a very competitive industry. Workhorse, Arrival, a lot of companies are trying to do this. CANOO is trying to do it. And then you have the regional trucks like these. That's going to be competing more with Lion Electric, not as much with Tesla or even NIKOLA if they ever make one, right? So they have very lofty projections going from 116 units to 33,000. So we'll see if they're able to do that. Now, the big thing with this company is, yes, they do have some contracts. For example, UPS announced a non-binding contract in 2021. But that's the thing, is that so far their contracts have been so small. For example, recently they announced Dickinson is ordering some trucks for the company, but only 5 of them, right? So that's not enough to fill your pipeline. So even though the company has very high projections, it is very difficult for me to put them in the must-have category when you compare them with others. So 1.43 billion valuation right now is pretty reasonable. 2021 revenue 14 million, 5.2 billion in 2025, and they are going to have 515 million in cash. A lot of cash is great. Even if they weren't doing much before, that's going to allow them to develop their products. Now, because of all of those, I'm going to put them in maybe later. At some point, when they start producing, they could be interesting, but not for now. Next up, we've got NIKOLA. This pick might be a little controversial because I'm going to put it in the maybe later section. So I know some of you are going to say, I'm never investing in this company ever in my life, and I totally get that. I mean, we all know the drama surrounding this company, and let's be totally honest, Trevor Milton was a clown, totally over-promising and under-delivering. So this company planned on making these hydrogen fuel cell trucks and also build a big infrastructure of hydrogen recharging stations, right? And throughout this saga last year, where they didn't really have their own technology with the truck rolling down the hill, that was exposed as a fraud. They were using third-party parts, right? Not reusing their own solutions, even though they were saying that they would. They were also, they lost their big contract with GM. So the company was off to a really, really bad start. And I don't even really like the management team. Like Steve Gursky did not do a good job, right, as the manager of Vecto IQ. Jeff Euben, that guy's very shady as well. So there's a lot to dislike about this company. However, here's the thing, is that right now they have a $4 billion valuation, which is much lower than where it was before. And it's a case of fake it till you make it. They got so much money from the transaction when it closed, 841 million as of December 2020, that now they have money to throw at this project and actually start delivering on it. So even though everything is shady about the company, I mean, when you have so much money to deploy, you are going to make some progress. So it is very possible that in the future, they are going to be able to deliver on their infrastructure and the trucks. In fact, over the past couple of weeks, they announced that they started implementing some of the hydrogen infrastructure. So I have a lot of reservations about this one. If I could, I would put it kind of between them. I don't really want to. I don't like the management team and everything. but I'm going to put it in the maybe later. Who knows where they're going to be in 3-4 years. Maybe they'll be a lot more interesting than they are right now. Next on the list is LUCID Motors, and this one, unlike the previous two, I'm going to put clearly in the must-have category because everyone was comparing this company to Tesla before. They were calling it the next Tesla. Now, what's changed? Well, the only difference between back then and now is people had sticker shock when the merger was announced and they realized how valuable the company is. Well, it's valuable for a reason. People are very excited about the Lucid Air, right? There is a lot of demand for this vehicle, even though they haven't delivered one yet. So they opened up the reservations for their main model, the first one worth about $160,000, and the reservations are full for the second half of 2021. So there is a lot of customer demand for this car, and I have absolutely no doubt that they're going to be able to deliver on it. Now, the Lucid Bulls think that this company is going to be the next Tesla, and is going to be worth about 10% of Tesla's valuation when they start to produce and deliver these cars. While Tesla currently is worth $723 billion, and Lucid is worth 28.47. So if you do 10% of Tesla's, that would give this company about a 2x upside in next year, right? As soon as they start producing the vehicles and delivering them, it's going to give the company a lot of validation for their technology and their ability to deliver on their promises. Plus, they're going to have $4.5 billion in cash. Talked about it with the other companies. When you have that much in cash, it takes a lot of the risk off of the table, right? Because they're going to have multiple opportunities to build the vehicles, and even if something goes wrong, they'll have more than one chance because they have such good funding. Now, last but not least with this company, right? If they were only a car maker, they would face the same problem that Tesla did for many years with all of the analysts. They would be compared with Ford, GM, and some of the other legacy automakers. But they're trying to position themselves exactly like Tesla did as an energy company that also produces cars. So that's why they're going to be working on their energy storage systems, technology supplier, meaning that they want to sell their technology to other companies. They're going to be an energy company that also sells cars. If they can succeed doing that, their valuation will increase over the next few years. So this company, in my opinion, at these prices makes sense. It is the type of company that I would want to hold long term, stick it in my drawer, and come back to it in 5 years and see if they manage to succeed on their projections. So in my opinion, Lucid is a good one. I'm going to keep this one long term. Our next contender is Lion Electric, and if you're a friend of the channel, you probably know where I'm going to put them. This one is a clear must-have above Lucid, in my opinion. It is a no-brainer. The company constantly announces new partnerships and contracts, and they have a lot of support by the Canadian and Quebec government. So that really limits your risk as an investor. So this company is low risk, high reward. That's my type of investment. I feel like anyone that wants to invest in the electric vehicle industry has to have at least a little bit of exposure to this company. It's a no-brainer. So they have regional trucks, Class 6, Class 8, right? The Lion 6 and Lion 8. One of their big specialties is the school buses. They're probably going to get a fairly good market share in that category. Then they have specialized electric vehicles. So the company builds them from the ground up. Yes, they do use third-party parts, right? But since they assemble everything themselves, that allows them to go wherever the market desires. So if a company needs XYZ, they can probably build it. The company is anchored by the big contract with Amazon, so they're going to order up to 2,500 Lion 6 and Lion 8 trucks. That, of course, validates the company's technology and the product and their ability to produce them, so that is wonderful. Quebec recently announced that they were going to renew their fleet of school buses, up to 10,000 of them, and they're attributing $250 million to that project. Well, who's going to get these contracts? You know that Lion Electric is going to get a fairly big share of that. So again, that really increases the floor for this company. Maybe they'll get, who knows, 100, 150 million out of that. So that's just going to help the company grow in the next few years. The governments are helping them build their battery factory in Quebec, right? So that again is going to help them grow. Right now, they are worth $2.85 billion, and they are going to have $494 million in cash after the transaction. They have fairly high projections, right? We'll see if they're able to meet those. But this is one of the best companies in my opinion. Absolutely no doubt about them. I'm going to sleep very well at night owning them. The only concern that we can have with this company so far, in my opinion, is are they going to be able to really penetrate the US market? We know that they're getting contracts already with some school systems and all of that, but are they going to be snubbed versus, let's say, PROTERRA, which is more of a real American company? That's one of the things that we'll have to see in the future, but in my opinion, this one is really worth the little risk versus high reward. Alright guys, next up we have Lightning eMOTORS, and this is a tough one. If it was just for the warrants, I would put it in the must-have category. In my opinion, they are one of the best investments in the stock market right now, and I personally am loading up on them, so disclaimer on that. However, if we're analyzing the company and the shares, I'm going to have to put it in the very good category. And so this company has much lower growth potential than some of their other competitors because they're focusing on more of a niche market, really highly customized electric vehicles. So for those of you not as familiar, no, they are not doing just retrofitting of older used vehicles. They are also producing new vehicles. What they're doing is they are getting gliders from OEM that make them in mass producing them, like the Ford Transit, and then they are converting them to electric vehicles. So they are considered new vehicles. What they do is they literally slide their drivetrain into it, and then they actually convert some of the other aspects, like they customize a chairlift, for example. So those are the types of vehicles that can't really be mass produced at 25,000 at a time. So that is the market that Lightning eMOTORS is focusing on. So because they don't have that much automation compared to some of the other ones, it kind of stunts their growth potential long term. However, in the short term, they keep getting a lot of orders. Like this is one of their most popular model based on the Ford Transit. They keep selling those, right? So they have, for example, DHL, they're delivering that one. They're also doing a lot of the shuttle buses, right? That is the type of vehicles that they're specializing in. And also, you know, they recently announced 200 vehicles for ABC coaches, right? So those are not cheap vehicles by any means. They plan on doing a lot of other things like the ambulances and everything. One of the biggest risks for this company is if competitors and some of the OEMs themselves decide, hey, we're just gonna make the ambulance ourselves, right? So that is a very real possibility. According to Lightning eMOTORS, they're saying, well, they don't want to do that because it's too customized, right? It doesn't fit their automated model of building 25,000 units at a time. We'll have to see in time, but in my opinion, that is a little bit of a risk. However, when you look at the numbers, the company right now is worth $585 million. Very, very low compared to the other ones, and they should get a little under $172.5 million from the transaction. There were some redemptions, so I'm not sure exactly how much they're going to have on their balance, but they should have enough to really progress over the next few years. Very realistic projections, 63, 354 million, and 640 million over the next couple of years. They already have a lot of orders. This company, in my opinion, the price is so low that you're not risking a lot for what you're getting. But in my opinion, this one is very good. If it was just for the warrants, I would put it in the must-have. Our next company is going to be one of the faces of American electrification in the next few years. It is PROTERRA. Now, I think this is a great company. Lots of good potential in the future. I'm going to put them in the must-have category, but right behind Lion Electric. Now, don't get me wrong. I think that both of those have a lot of potential. I honestly don't know which one is going to be most successful 5 years from now. I think that both of them are good candidates. I'm going to give Lion Electric a tiny edge just because of the fact that they can produce almost any type of electric vehicle, so it gives them a little bit more flexibility. But really, I mean, either of them are really good. I think they're both great investments. Now, PROTERRA decided to really focus on their buses. That is their specialty. That's what they're known for. The school buses, which will compete with Lions, and also the city transit buses, which they're already delivering. Now, most of these have been successful. There have been a little bit of a problem with some of them, right? But over time, the technology is going to get refined. I believe it's in Philadelphia. Some of the buses had to be recalled for some problems, but overall, I mean, it is a success story so far. Now, the company decided to do a little bit of a different business model than the other ones. They decided to partner with Daimler for the other types of electric vehicles. So that is both good and bad, right? It's going to lower their potential a little bit since they're going to be sharing in that revenue, but at the same time, it gives them a lot of backing, both financially and in terms of the orders that they're going to get. Daimler is one of the biggest producers of vehicles in the world, and they're both a customer and an investor in the company. They invested $415 million through the pipe, right? So those two companies are very much integrated, and Daimler is going to want them to be successful. So Daimler has iconic brands like Thomas for the school buses, they have the Freightliner, they have some of the other ones, and this year they're going to produce a last mile delivery van using some of PROTERRA's technology. And so this is great for PROTERRA. It really increases the floor and limits your risk as an investor when they have such good backing by Daimler. They also have a lot of political backing. Recently, you know, the president that did a virtual tour of the factory, and you guys know that like throughout this administration, everything's going to be about like sustainability and going green and all of that. So they are going to really purchase a lot of different electric vehicles. Now, this company has a slight edge over Lion Electric because they are US based in South Carolina. So maybe that's going to play a factor, right? We don't know yet, but that is one thing to keep in mind. The company right now is worth 3.37 billion. They're going to have 648 million cash. So again, they're not going to have any funding problems. Their revenue projections are a little bit lower than Lion, but some people would say they're more realistic, right? You can interpret it both ways. So 246 this year, 439, and then 838 in no, that's not 2025, that's 2023. So 838. Who knows if they can do that? Again, both companies are very competitive. I like both of them. This one is a must-have, but slight edge to Lion in my opinion. Next company on our list is Arrival, and this one has a cult following, so I might make some people unhappy, but I'm going to have to put this one in the good category. So I can't put them with the top ones because those are all delivering vehicles right now, except for LUCID. So because of that, you have a little bit more certainty around it, and they're much cheaper than Arrival, which currently is pre-revenue. So the company is built on top of their UPS contract. So UPS ordered 10,000 units of the delivery vans with an option for another 10,000 units. So the company right now is just starting to do these deliveries. And that's why there's a lot more uncertainty than with some of the other companies that we've looked at earlier. But if they're successful and UPS goes through with these 20,000 purchases and much more in the future, well, then the company has exponential growth ahead of them, right? So it's kind of like high risk, high reward for this company. Now, they're also going to do the city transit vans. I would assume that they're buses rather. I think that they're going to start in the UK and over time expand worldwide. One of their special things about them is the microfactory approach. So this is not really well tested yet. We don't really know if that's going to be very successful. They want to do these microfactories in different countries closer to their customers. So we don't really know if that's going to be more successful than the gigafactory model of just building one huge factory and mass producing the vehicles, kind of like the Tesla model. We're not quite sure yet. And this is the thing, is that the company right now is worth $8.84 billion, and they're only going to have $669 million in cash. So they are over twice as expensive as PROTERRA, almost 3 times as expensive as Lion Electric, and their cash balance is pretty much the same as the other two companies. So they probably will have to actually raise more money in the future, right? So because of those unknowns, I like a lot about the company. I think they might be very successful in the future, but I can't put them quite in the same category, in the same tier as the other ones. Their revenue projections are through the roof. 0 for this year, 1.009 next year, then 5 billion in 2023, and you guys know they plan on making 14 billion the year after that. So if they can scale this quickly, even with 669 million, I mean, this company is going to do like amazingly well for the investors, but I don't know, I'm a little bit skeptical. I wouldn't put it in my top 3 personally. What about HYLION, the company that started it all last year? Well, we have to put them in the good category. So the company has some good things going for it. I like Thomas Healy and everything, but at the same time, I do have reservations. They are very early stage. They only delivered 20 prototypes last year, and for that reason, when you compare them with the other companies in the commercial EV space, now they're starting to have a lot more competition for the investor dollar. So last year, they were the only game in town. They got a lot of attention from the small retail investors, but now a year later, right, all of that money is split between HYLION, but also PROTERRA, Lion, Lightning eMOTORS, Arrival, LUCID, all of those companies. So it's going to be a lot more difficult for the company to go back to $10 billion $100, which they went up to last year. Right? So the share price went up to $58, and now it's crashed all the way down to $9.35. But keep in mind, the lower the price goes, the more attractive it makes this opportunity, right? It accounts for some of the risks involved. So the company is trying to tackle the problem of long distance trucking. A trucker needs to drive 2,000 miles. He can't just stop every 200 miles to recharge for a few hours. He needs to be able to drive long distances. And by adding the company's flagship product, the Hypertruck ERX, which is kind of like an addition to the drivetrain, is going to allow them to drive up to, I believe, 800 miles. So that's going to make the routes a lot more efficient. So the first ERXs are going to be with natural gas. Eventually, they can convert them to hydrogen fuel cells. That's absolutely no problem. The company is future-proof in that regards. So recently, they announced a new generation of battery modules that are supposedly very efficient. Maybe they'll be able to license those to other companies that aren't competing with them. And that would be very good for them because they really need the revenue. Their revenue projections are very, very low compared to some of the other companies. Right or wrong, right? So in 2021, they expect to make $8 million in revenue. That is very small. They could ramp up to 344 next year and then $1 billion in 2023 if everything goes according to plan, but I don't really see a lot of contracts announced for this company yet. So we'll have to see if they're able to do that by 2023, but I have a lot of reservations around it. But they were more attractive last year as a short-term momentum play, in my personal opinion. All right, so the valuation right now is $1.48 billion. It's still fairly high for a company that's this early. And they have $591 million, so that is to their benefit. There's almost no risk of this company going bankrupt anytime soon, right? So that is very good for them. If you want to roll the dice on this company, like that lowers your risk a lot. They have so much money to work with that they can make their product work. So one of my main questions with this company right now is how are they going to do when Tesla rolls out their autonomous driving for their trucks? That's going to be a game changer. Are they going to be able to do the same thing and have the ERXs? If they can, have fully autonomous driving and the ERX, then it's going to be very, very good. But if they are competing head to head and there's a driver in the HYLION truck and then there's no driver in the Tesla truck, well, then Tesla's probably going to win. So this one's kind of a toss-up. There's some good things. There's some things I'm not as sure about, so I'm going to leave it in the good category. Don't sue me. All right, guys, next up, a controversial one, we have FISKER. This one, I feel like people are going to possibly be annoyed with me, but I'm going to put it between maybe later and not for me. So when they announced the merger, they didn't have either the manufacturing partner, which ended up being Magna, and they did not have their technology platform, which they had been negotiating with Volkswagen. But I feel like they didn't start on the right foot, and the company should never have announced a merger like at that time. But they did, and now they got a lot of money to work with, so they might be able to make their project happen. So because of that, I'm going to put it in the maybe later. I'm not interested in buying into them right now, but if in 2023 they ramp up their production and they start selling, hundreds of thousands of them, then yeah, of course I'll consider it, right? It's all about making money, not my personal perception. So the car is beautiful, right? It's the Ocean. They're going to start producing them in the fourth quarter of 2022, which in my opinion is kind of late to the game. That is one of the big negatives. So by that time, there are a lot of legacy automakers that are going to be in the market with their much more well-known brands, right? So even though the company already has reservations, I feel like if they had been able to launch them this year, that would have been very beneficial for them. The fact that it's not going to be ramped up until 2023 really is going to hurt them. But even then, they have a lot of good press. People are excited about this vehicle. So it's not necessarily for me right now, but I have to give them credit. Look at all the analyst ratings, 29, 40, 30, 31, 17, 31. So I know Jim Cramer, for example, talks about it all the time on his show. He loves this company for some reason. So we'll see what happens with them, right? I don't have to like all the companies. As you can see, the analysts think that it's going to go up. There's maybe upside there. If we look at the stats currently, it's worth $4.39 billion. It is much, much cheaper than Lucid, right? So you have a lot of upside there if they're successful. They have $991 million, so once again, very well funded. They can make it happen, right? So they have a lot of money to throw at it. Their revenue projection, 0 for this year. They think they can get to 600 million next year, just in that quarter alone, and they could ramp up to 3.3 billion in 2023. So if this is the case, once again, like, it's not for me right now, but who knows, maybe later they're going to be good. So I'm going to keep it on my watch list, and over time, when things change, I might buy into them. If you're into them right now, just be patient, because it's going to be a long ride for FISKER. CANOO, oh CANOO, GoEV. I feel like this company has been a thorn in my side since the beginning, so I'm debating whether I should put it in the maybe later or not for me category. As you guys can see, I put NIKOLA up there. I'm a positive person. I always imagine that the company is going to pull something, so I'm going to put it in the maybe later, but I feel like they have been very deceptive so far, and it's kind of debating between the two. So here's the thing, since I started my channel, I talked about this company a lot, right? And they were selling it as a very good technology platform based on the skateboard, that they were going to build a partnership with Hyundai and help them develop their own line of electric vehicles, sell them engineering services worth hundreds of millions of dollars, and then also use a skateboard to develop their own vehicles, right? So they have the lifestyle that they were going to sell as a subscription. I didn't really like that. I thought that was very capital intensive and put a lot of risk on the company. But at the same time, they were talking about this delivery van, which now that became a lot more interesting, and the pickup truck. I love these designs. I know they're very quirky. A lot of people don't like them, but I think these would be very, very successful, right? They're talking about different applications, like just normal delivery van with a lot of space in the cargo, but then they can convert them into food trucks or small business related vehicles. You can wrap them with whatever you want. Then the pickup trucks are very quirky, and I feel like they have a lot of utility, not just for fleets, but even for normal consumers like us. So I think those are going to be successful, right? But here's the thing, they had one of the worst fourth quarter call I have ever seen in my 10-12 years analyzing companies in the stock market. I mean, it was so bad at every degree. They entirely scrapped the relationship with Hyundai, so they're no longer selling the engineering services. The entire management team has been gutted, right? So Tony Aquila is now going to be replacing the CEO that had been there since the beginning, Ulrich Kranz, I believe. Sorry, my spelling is not great. So we're seeing a totally different company than we had before. And that, to me, spells a company that just doesn't know where it's going. They might be successful in the future. I mean, the company, again, I keep repeating this over and over again, but they have so much money. They have $702 million, and they have all the patented technology already in place, right? They have a skateboard already. So they have, a lot going for them. But at the same time, when you have such drastic changes in the company, I can't even tell you what the 2023 projections are right now, because all the projections that we had when they were a SPAC, well, all of those have been scrapped, right? So we have analysts that are saying maybe they'll do 85 million this year, maybe, and next year maybe 178, but who knows at this point? So they're not going to be producing these vehicles until 2023. The company is worth 2.045 billions right now. I mean, as you can see, it is very borderline as not for me, but I still hope that, with the vehicles the way they are, I like them. I hope they do something in the future. I'm not going to invest in it right now, but I can say that I will never invest in them again. Next up, we've got HYZON Motors, a company that I did not know a lot about before I did this research, and I'm going to put it in the maybe later category. So this is a company that I see as having some potential, right? I don't see anything really suspicious with them, no big red flags or anything, but I see them kind of like HYLIION as far as being very early stage. However, HYLIION has kind of an easier path to success because they're working on technology that already exists, right? They're just doing the drivetrains for trucks, as opposed to HYZON is doing the same thing as NIKOLA, which is hydrogen fuel cell vehicles, minus, I guess, the fraud allegations with NIKOLA, you know what I mean? So they have the Class 8 tractor trailers, the buses, and I guess these are Class 6 more regional style vehicles. But the thing is that we all know that currently the hydrogen infrastructure is just not mainstream yet, either in Europe or America or nowhere, right? It's not very well developed, so it's not as cost effective. So that's why, even though I think they have a lot of potential, I'm not quite ready to invest in them. I'm going to leave them on my watch list, and over time, if that becomes like the preferred fuel, then I think that this company is going to be a little bit more interesting. But that doesn't mean that they don't have anything going for them. If you look at the progression they've had, this company has been around for a long time. I mean, they started in 2003, and they started working on their fuel cells for all these years. Until, look at this, in 2019, they delivered this 42-ton fuel cell truck, right? It seems like a lot of their customers are in Europe and Southeast Asia, like Australia, New Zealand. Those are not parts of the world that I know as well, of course, being in America. So that's why I don't know as much about the company, but look at this. This is a bus, I guess, in Australia, and they have other customers. Recently, they announced 1,500 trucks ordered by HYLIION in New Zealand. I would assume this is a fairly big company in New Zealand, right? So as you can see in Southeast Asia, they are getting some traction, and over the next few years, it might become bigger and bigger. Look at this. This is another contract that they announced recently. 15 hydrogen fleet vehicles to be delivered to a municipality, which this sounds like a place in Europe, maybe Germany, I'm not quite sure, Groningen. So they're going to be delivering these vehicles over the next several quarters, and here's the thing, is that as the hydrogen fuel cell infrastructure starts to develop, well, this company might get more and more contracts. But for now, I feel like temporarily their growth is a little bit stunted because the cost effectiveness is not as good as some of the other options out there. But look at the valuation, very cheap, 2.19 billion, right? And they're going to have 576 million in their portfolio as cash to be deployed for their projects. So, you know, small revenue in 2021, 37 million. They have a very high expectation in 2023, growing from 198 to 972. Not exactly quite sure what the inflection point is at the time, but, you know, that bodes well for the company. So, again, this is one that I'm interested in maybe long term, but for now, it's not quite investable yet. We're getting close to the end, but now we have to talk about REE Automotive. This is another company flying under the radar, and I like their technology, but I'll be honest, I have to put them in the not for me category, at least for now. Until the price drops tremendously, then I would bump it to the maybe later category. Here's the thing, is that they are a skateboard company out of Israel. So they're a lot like CANOO, except maybe the technology is as good, if not better. They have a lot of good partnerships, and their technology can be used to make a lot of different types of vehicles, right? And we like that type of flexibility. However, they're going with a different business model. They're going after partnerships with other companies, right? So they're going to use Magna International to build these as a partner, and then they're going to license it to other companies, maybe. I guess that's what their plan is. So we're not quite sure yet, but they have a big pipeline, apparently, according to them, right? So they're talking about millions of units in the future. But for now, they're pre-revenue. They don't plan on making any money right now or next year. They would not start making any revenues until 2023. And this is a big deal right now. I have so many opportunities in the market right now, so many companies to invest in, that I just don't have a place in my portfolio for this company right now. If they were going into production this year or next year with their skateboard, which seems very good, I watched videos before, then it would be a little bit more interesting. But when you consider the company right now is at $3.13 billion valuation, like the same price almost as Lion Electric or PROTERRA, I mean, I'm going to go with those companies, not with REE Automotive for now. They're going to have 436 million. Look at those revenue projections. 0 this year, 0 next year, and maybe 300 million in 2023. So what do you guys think? Do you think this is a good buy or not? For me, again, it's a pass. I just don't have space in my portfolio for companies like these at the moment. Now, if the price drops to like $1 billion, for example, right, and they're announcing contracts left and right, then I'm going to be all over it. But for now, it's not for me. Next up, we have FARADAY Future. This company has a long track record of failure, so I'm going to put it not in the not for me category. I'm a sucker, so I'm going to put it in the good category. Hear me out. I know it sounds counterintuitive, but if you look at this company, look at the history of it. They have been surrounded with drama and failure, and that's why the price is so low. The previous CEO and founder, I believe, GIK poured tons of money into this company. what he would do is raise money in China, and then he would pour it into this company, right? And over time, yeah, I mean, it didn't work out. They never were able to get it off the ground. But when you pour so much money into a company, you end up developing products. And at some point, they got a breakthrough. Now in 2021, it seems like they're turning a corner. They have a new CEO, they have the product. Look at this one. This is the FF91, right? And look at the inside. It's very nice. I would like to be a customer of this vehicle. It compares very favorably to the LUCID one or any of the other brands right now. I think this one is amazing. So I don't know if I can afford it. That's a different story. But their plan is to use their facility in the United States, which is going to have a capacity of 10,000 units to get started, right? This should come online at the end of the year. And then over time, they're going to really ramp up production using contract manufacturing in Asia. So they have the one in South Korea that's going to produce, 270,000 vehicles per year. And then they also have some in China. So those are going to be huge markets for them, right? They have the capacity of eventually selling hundreds of thousands of vehicles per year. And they're kind of close to production. Like, it's not the same company as they were, let's say, 3-4 years ago, where no, probably you wouldn't want to invest in them. So if you look at the numbers, this is what's attractive about it, is that, yeah, they're not going to have revenues this year, but if they can achieve their goals, right, they're going to get 504 million next year and then 4 billion in 2023. Now, we can be very, very skeptical about these numbers, right? This is a company that has not been successful in the past. But look at the valuation, 3.4 billion. They have been so beat down that right now it makes a little bit more sense, right? It is a nice little gamble. You can roll the dice and hope that you land on your number and you make a lot of money on this company. I'm very interested in the warrants for this one. So the thing is that, you know, it is about 10% of the value of LUCID right now. Does that mean that they have more than 10% odds of being successful compared to LUCID? I think so, right? So even though I really like LUCID, I feel like this one, it's not quite the same type of quality of company, but they have a chance of being successful. So I like it. 738 million cash. They have plenty of money to fund their production. So I'm going to put it in good. I wouldn't put all of my money in this company. There's many that I like better than that, but you know, it is a nice little gamble. Coming up, we've got XL Fleet, and where does this one go? In my opinion, it goes right into the bin. This one is trash mode, in my opinion. I wouldn't touch it with your 10-foot pole, let alone mine. Now, this company, I mean, they're trying to be kind of like Lightning eMOTORS. They want to convert vehicles into electric, but they're not good at it, right? Most of them are still just in research, and the ones that they can produce, they're not delivering on them. So look at this. In the third quarter 2020 report, they said that their projections for 2021 were going to be that they have a pipeline of 220 million and they were going to make 75 million. So of course there's going to be a discrepancy between your pipeline and what ends up being revenues, but they forecasted 75 million. Now what happens 1 quarter later after they merge and now they have all the money? Well, they changed their projections. Hey guys, we're only going to make 1 million in the first quarter, and for the rest of the year, I can't even give you projections on how much money we're going to make. Probably not a lot because of our supply problems. So with that said, I mean, if you guys are believers in this company, I can't really convince you that it's not good, but it's not for me, right? There's so many better opportunities out there. So you have Carson Block from, was this Muddy Waters? Anyway, there's a few short reports that came out about this company, and they said that a lot of their orders are kind of exaggerated and the company is not doing that well. And that was proven by their announcements that they wouldn't even give a forecast for this year, right? So even though the company is not that expensive, $948 million, and they have 407 million in cash apparently, why would you go with this company rather than Lightning eMOTORS that is actually getting customers and delivering on their vehicles right now? So for that reason, I'm out. This one is a not for me. 15th company analyzed, we have LORDSTOWN Motors. I've talked about them multiple times on this channel. I'm debating between not for me and maybe later. I'm going to put it in maybe later. I don't have any trust whatsoever in this company or the CEO, Steve Burns. I feel like they're extremely shady and it's all based on a lie. But with that said, we have a problem with SPACs, right? It is fake it till you make it. If you can make it to the merger, after that you're getting hundreds of millions of dollars, and then you might be able to pull it off even though it was all built on a big lie. July. So I feel like in this case, you know, in a few years, who knows where we're going to be. Maybe they're going to take the CEO off. I hope they do. If they do so, it's going to be a little bit more investable. So they want to make the endurance pickup truck. Lordstown, Ohio really needs this. There was a lot of enthusiasm about this company. It went above $30 multiple times until the big short report happened, which really crashed the price. Now it's at $9.94. So Hindenburg Research published a short report saying that a lot of the orders that the company said that they had, the CEO kept going on TV saying they had solid orders and that they were almost ready for production. Most of that is a lie. First of all, one of their vehicles caught fire early this year, and they were just in the San Felipe 250 miles and they had to withdraw early. So the company is not ready for production quite yet. They're still building prototypes and testing it. They're not going to do mass production later this year. It is almost guaranteed, right? So they had a lot of misrepresentation. There's nothing wrong with them not being able to complete this race. It is very demanding. The problem is when the CEO tells you that they are ready for production when they're clearly not. So that is the big issue. But what I do like about the company is that they do have the production facility. So now all they need is the technology, the personnel to like operate this building, and they're good to go, right? They'll be able to produce them. So there is still a possibility that this company will be successful when you consider that right now they have $630 million in cash. That's a lot of money to throw at this project. So the company is worth $1.61 billion right now. I had a tough time finding projections for the company, especially with all the drama surrounding it. So some analysts are saying an average of 107 for this year. I don't see that happening. And then almost 6 billion next year. That seems like a big stretch to me. But again, it is up to you. I mean, I know some of you really like this company. Maybe later for me, but I have a lot of skepticism towards it. Alright guys, finally, last but not least, we have Electric Last Mile. This company I would put either in maybe later or on the edge of good, but probably maybe later. So here's why. This is a company that is very, very simple. They have a very simple business model. Sometimes simple is better, right? This is a vehicle that people are going to want. It is a class 1 delivery van. I can imagine all sorts of tradespeople wanting this vehicle. You can have a plumber using this, someone that does flooring install. All sorts of tradespeople are going to want this, or even small companies that have small deliveries to make. However, with that said, this is a type of product that all automakers are going to be able to make very easily. So there's going to be a lot of competition and the margins are probably going to shrink very rapidly. So that's why, you know, I see some positive about the company, but also I'm a little bit skeptical. I need to see more over time, right? Are they going to be able to sustain their margin and make profits? Now, they have this big facility that they're going to be using, 100,000 units per year. So if there's demand for the product, which I think there will, they will be able to fulfill that demand. They are using this facility based on Ceres, right? What they're going to do is kind of like a partnership, a joint venture between this company and SOCON, a company from China that is going to provide the technology. So you combine both of them, and here you have the Class 1 delivery vans from Electric Last Mile. Very, very simple company. They're going to be using these third-party suppliers, right, to produce all of the parts that they're going to need for that, and they're just going to assemble them. So it is a very simple, low-mode business model, in my opinion. They're going to upfit them with whatever the customer needs. So if it's a plumber, they're going to need something different from, let's say, someone that cleans gutters. Maybe they'll need a big ladder on top, you know, stuff like that. They're going to upfit them based on the customer demands. So supposedly they have 45,000 pre-orders right now that are non-binding. And again, I do think that there's going to be a lot of demand for this product. It's just a matter of how long can they be successful and, you know, make enough revenues and profits for this company to be worth your investment. I'm not sure that they'll be able to sustain it. But the company is very cheap. Right now it's at 1.17 billion. They're going to have 345 million in cash. So, you know, if they can be successful for a few years and grow from there and build other different products, you know, that are going to have less competition, that would be beneficial in my opinion. They think they can make 122 this year, 613 next year, and 1.17 billion in 2023. I feel like these projections are very, very aggressive, right? Exactly for the reasons I was telling you guys about. So that's my opinion for electric last mile. I'm going to put it in maybe later. If they can sustain it for a few years, I would be interested in buying this company, putting them borderline good if they have that many pre-orders already. Well, that's it for the rankings. I hope it helps you in your research and you enjoyed it. Now, most of those companies, as you can see, I put in the middle. We don't have enough validation on their technology, and if the market is going to accept them, are they going to be able to sell in large quantities? Over the years, some of them are going to be very successful, but for now, we don't have enough information to really make a confident investment in all of these companies. They are all very speculative. The companies at the top are the ones I'm mostly investing in, and I'm putting my money where my mouth is. Those are the companies that I feel have the best risk versus reward. Some of them might not be successful in the end, right? A lot of them are going to fail, but they're the ones that, you know, the risk of losing money is much lower because for one reason or another, they have benefits and advantages over the lower tier companies. LUCID is an example of that, right? There's been a lot of hype about this company. They have a factory. They're almost ready for production. They have huge financial backing. So even though the company has some risk surrounding it, well, it's not the same type of risk as some of the lower ranking companies that aren't even close to production, won't be until 2023 plus, you know, and have a lot of risk attached to them. But that's why I did the ranking the way I did. You guys might agree, might disagree, let me know in the comments. All I ask is if you enjoyed this video, like and subscribe. And of course, if you know someone that will find this useful, just go ahead and share the video. It's going to really help out. So I'll see you guys later. I hope you enjoyed it. Thank you.